We are live. Hello and welcome to Product Lessons, a podcast channel where we talk to product leaders and tech entrepreneurs from all over the world and learn from them how they build businesses through tech products. Only if you are living under a rock, you would not have noticed the tectonic shift that's happening in private startup investment. There has been a Oh, I just realized I lost connection to my camera, and this is something that has never happened before. Let me just refresh it a bit. Didn't expect. I'm back. Sorry for that little glitch, but
No
all
worries.
glitches are good eventually. All
Well
right. So where
styled
were we?
out.
I'll come to you, Rob. I'll introduce you. So as I was mentioning, there is a shift happening, a tectonic shift where there is democratization of private startup investment that has happened in the last few years. For years, the only way for consumers and retail investors in companies was through public markets, through stocks. But we all know that most of the value is created by the time a company reaches its IPO from the seed, and that runway, that access was only was given to privileged few exclusive insiders who could invest in startups at an early age and went on. Whenever they made the mullah, they went on to make millions, and most retail investors and consumers did not have that chance. So but in the last few years there has been a democratization, and especially in the angel investing space, and today they say that almost everyone is an angel today. And catalyzing this momentum are new platforms that have come into the industry, that help you make these investments in the seed, pre-seed rounds in the form of SPVs, so on and so forth. They have the barrier to entry, and they made it very seamless to invest in such spaces. And one such platform player that was launched recently is Further, and I'm looking forward to talk to the CEO of Further today, Rob Tominey, and have a conversation with him on what does his platform offer to retail investors. So very, very excited about that. So we'll spend the next 40-45 minutes deep into that. So with that, let's welcome Rob. Rob, welcome to Product Lessons. How are you doing today?
I'm great, thanks, Ravi. Great to be on. Great to be on product lessons.
How has your day been so far?
It's it's busy. It's like I think the myriad of different things that you're working across when you're starting a business
Hmm.
just makes every day chaos. So today I've been across a marketing debrief of everything that happened over our launch, which was great, and whilst also building some software tools for our funds that we're working with, and we'll be working with other funds on the B2B side soon. So yeah, a full crazy day spanning across software marketing, B2C, B2B, all over the place.
I can imagine. And before we jump into the meteor stuff of what Further is all about, I would love to know a little bit about your background, a little bit about your initiation into entrepreneurship. What has your career been so far?
Yeah, so my initiation into entrepreneurship, I think I I don't know when exactly that happened, but I must have been very young from selling chocolate bars on the playground or things like that. But yeah, we all start like that, don't we? We're all hustling from a young age. Everyone who ends up in this position. Um, but the main thing that I was doing was well, at university. That's when I kind of had some time to actually properly do something, and I started a online ticketing company at university. Ended up selling that just before leaving Manchester and coming down to London. And the the next business that I did then was travel and festivals. So the aim had always been to initially start a cash cow business,
Hmm.
to then enable a more high growth tech backed scalable company either within the cash backed business or external to that. And and that company's main stage, and that's doing really well, going from strength to strength, and that does festivals all around the world. And so it got to the point where we'd done that, we'd achieved goal one of a essentially a cash cow that manages itself, and I was looking to do something else, and I was also looking to invest my money myself in different ways. So like we'd received VC backing at main stage, and I could see how things worked from the investee side, and I was also doing all sorts of different investing myself. Like as you say, like the democratization that's happened over the past decade has been insane. I was looking at different ways to maximize my yield, obviously with interest rates at rock bottom as they were in the 2010s. And so I was looking at the likes of Funding Circle, Nutmeg, Property Partner, all of these different new things that had come up to democratize different assets. So whether that's debt with Funding Circle, or financial advice investments with Nutmeg, or property with Property Partner, and plenty more still. And I had done a bit of crowdfunding as well, but crowdfunding always really frustrated me when I was looking at it, because I had done some separate angel investments, but the deal flow is really, really hard. You have to be completely in the network, and you have to spend a lot of time doing it, and you have to be really skilled at properly due diligencing those investments. Um, and the what the equivalent with crowdfunding was just so poor. I couldn't. I was going on there, and I was wanting to see the company's financials. I was wanting to assess what I was putting my money into, and it was completely impossible. You get a fancy pitch video, you get a deck which says basically nothing, just the company's mission statement and some product pictures and things like that. But you don't actually get to see, right, how much money have they, what are their customer acquisition metrics, what stage are they at now, where like what are their chances of getting to the next stage, and what even is that next stage. You don't get anything to assess. And then seeing the VC investment that we'd received into main stage at that same time, we I'd seen the due diligence that they go through, and they have the ability to properly assess every deal. But then on the back end, they're managing that deal through to an exit on behalf of their investor. And those two things are so crucial in early stage. You've got, if you can't assess the deal in advance, and if you can't push the company towards an exit, then the chances of you getting a successful exit and that startup style multiple is very slim. And I think that, yeah, it's proven itself out. The exits from crowdfunding are really, really poor, and there's probably a lot of companies on there that have, they've taken the money and they're running their business nicely, but like they might not fail, but they might never exit. They might just kind of still completely continue to kick along. And so we wanted to open up um, early stage investing to many more investors, but we wanted to do it in the proper way, in the way that the majority of the majority of higher net worth individuals, and how they would invest into early stage, and that would be through venture capital, through experienced, professional, well-run venture capital firms. And I say we because by that point I teamed up with my old friend Seb. Seb and I went to uni together. I went down the entrepreneurship route, and he went into VC. And so he was working at a fund, and so then we both started to attack the problem together. And so yeah, that's I guess a potted history to the meandering path that took I and Seb to starting further.
Usually, one of my favorite questions to entrepreneurs is the opportunity cost, right? At any given point of time, especially if you have been a serial entrepreneur, there are at least a dozen ideas running in your mind where you could potentially would want to invest, would want to jump into seriously, right? Because any business is serious business. You need to decide to give your next 5, 8, 10, 15 years into an idea, right? So of all the ideas playing in your mind, why, how did you choose or pick this one idea? How did you invest your future into further and not something else?
I think that it resonated with a number of different things, and everything just worked. Like my background's economics. I was always really interested in that. I've got a real love for startups and seeing new innovations, and I think that I really do think that that's the way that we're gonna solve the world's problems through innovation and through startup innovation. The network was right there and perfect if, with my co-founder Seb, just being yeah, being someone so knowledgeable and someone that was close to me. And so yeah, everything just worked. So it's something that I loved, and something that together with a close friend of mine we could we could attack. And yeah, it all fell into place. I guess if things aren't falling into place so perfectly, you maybe have to do a bit of a deeper assessment, but we didn't have to do that.
Got it. Help us understand the difference between angel investing and VC investing. You mentioned, I think, briefly where you said, "Oh, in angel investing, it's also got to do with access because you need to get in to be in the network to know about the right deal flow, and it's always a challenge." What other differences do you see between angel investing and a VC investing?
Yeah, that's a really good question, because I think that a lot of people um, a lot of people don't really know, like it, and like they might not properly realize until they've done a few angel investments. But we've obviously taken on some angel investment, and we've been angel investors ourselves, and so um, yeah, we've had quite good experience from it, from different angles. But I think that like anyone can be an angel investor, just finding a startup and putting money into it, and there's different networks that you can go through to do that. Um, but you need to you can do it for fun, of course, but to have an edge and to do better than just sticking your money into a VC fund, you need to you need to have something special. And whether that is you've got a very particular outlook on the world, and you think that something's going to be a real growth industry. For example, I met a guy who's an angel investor the other day, and he's investing solely into machine learning platforms that develop backgrounds for video games. Very, very niche. But like he was like, this is he worked at DeepMind, and he was like, this is going to be an industry of the future, because as we all move towards the metaverse, and as video games become expandable, and machine learning creates that expansion, then these companies are going to be are, are going to be serious businesses. And so he had a very specific view of the world. And yeah, networks are a really big thing as well. Like you could have your edge by having like a great network. Like if you're deeply embedded within a particular part of the startup ecosystem, then you might be able to get deals that others might not be able to. Um, so yeah, like angel investing is for those special people a potentially great route. But and yeah, anyone can do it for fun. But to outperform, to have alpha, then you need to have an edge.
Got it. So that is the constraint there, and not everybody is able to build that niche or to build that network or access. However, VC is also supposed to be a closed knit, right? Because VCs are governing bodies with access to capital, and they have a big team of say principals who run a VC fund. I did not ever know that they also give access to retail investors to invest in. a VC, right? Because for a VC, they are not, are they interested in small amounts or small pools of money, and why are they opening it up for retail investors? What's in it for them?
So I think that I'm just going to flip that around a bit, because what's in it for them to be exclusive? Like, what benefit do they have of being exclusive, of being a closed network? Because I don't think that they're going to get any benefits to their business of doing that. The only thing that they do want is ease, simplicity, and ease, simplicity, and steady streams of finances, but also diversified streams of finances. And so until we came along, they didn't open up investing to retail investors, but that's the gap that we're bridging. And it how we're doing that is by making the stream of capital coming from retail investors super low admin, and by enabling that stream to diversify their funding sources, whilst also enabling them to build their brand in the marketplace. Like, if it's an investor that's more in the public eye, then when you are looking to raise for your company, you're more likely to go with them. And through our software, we package up all the retail investors together, just to be completely super simple about it. And we package all the retail investors up together, deliver capital in a really easy manner to the fund, and manage all the customer support through the lifetime of the investment, and manage all the reporting to that investor. So for the fund, it is super low admin capital that is diversified, and that can also have the added benefit of enabling them to build their brand. And so, in that sense, the question is, why wouldn't they take it?
So are you one of those front runners who are changing this entire VC ecosystem by opening the coffers of VC funding? Like, are you the first few ones here?
Yeah, so we're the first to open it up to all types of retail investors. So
Mm.
you can have restricted everyday investors, sophisticated investors, and high net worth. They all count as retail.
Right.
We're the only ones to open it up to all three categories. Others have opened it up to sophisticated, high net worth. Um, and with the minimum investment with us is the lowest for the funds that we deal with. So you can invest from £1,000 into funds on further.
Got it. And how are your conversations? Like, how do you go and approach a VC proposing your platform to them, or how does this conversation happen?
So it's all quite network based, and luckily that's not something that I'm involved in, because that's a super complicated aspect to it. But Seb, my co-founder, he's a VC himself, and he knows all of the investors. He knows the best investors. He knows who we should be working with. And so yeah, it's a tight knit family, London, UK VCs, and Seb is in there. So that's great for us.
Got it. And what's the vision like? Add as many VC funds into your platform, or focus on a few industries? Because even VCs are are focused in certain industries, right? So there are tech VCs, there are property tech, maybe there are fintech, maybe. Like, do you focus on particular set of VCs, or they are diversified, or you do not have any such categorization?
Yes, good question. So it's what we're trying to do is trying to optimize it for the investor. And so how we're doing that is trying to strike the balance between giving them a range, so that they can choose, so they can choose between consumer brands. So you've got Pembroke, for example, that um, invested in things like Pastor Evangelists and Five Guys, and loads of other consumer brands like that, through to Triple Point, which is B2B SaaS, through to Hatch, which is very early stage, through to Ascension, which is the UK's best seed fund, and the UK's most active investor. They both voted that the other day, and yeah, and another and a good few more still. And we want to give people just the range to be able to find what they like whilst not overwhelming them with choice. And yeah, so that whilst giving them that range, we need to ensure quality as well. Like this is the first time that retail investors are meeting venture capital funds and able to choose between them, and we need to make sure that they're receiving high quality. Like we have a lot of funds that come to us that want to work with us, but like we need to make sure that they have great access to deals, that they have a good track record, they have a good team, they have a good vision, because we want to give the best to retail investors.
Got it. And do you also filter the retail investors, or everybody's welcome?
Yeah,
Do
it's tough because anybody can be a retail, everybody can be a everyday investor, but yeah, you still do have to go through some classifications, etc.
Yeah, but is that, for example, I am part of a few angel investment community, and they do some sort of screening, like you should be part of a startup network, you should bring in some value. So is that something that you are looking at, or everybody's welcome?
Everybody's welcome. Yeah, it's not an exclusive club. We are
Got it.
de-exclusivizing venture capital.
Okay. But what is the level of, so is there any engagement to these investors into the startups that the VC would be funding, like, or is it primarily receiving information based on how the startup is performing, or do they get to see the financials, and what kind of information do they get?
So they receive information on the financial performance by virtue of the valuation. But
Got it.
other than that, it's they receive the same information that other fund investors would receive, which is mainly going to be qualitative, because you are entrusting the fund to manage the financial aspects of the investment on your behalf. So
Got it.
the information that the people will be receiving is that is key news about the startup, any new investment rounds that that, that they've had, um, any big news about potential new clients or new business avenues that they're going through. Just the interesting thing that you might want to see, the interesting things you might want to see from companies that you're involved with. And because we think that it isn't just a black and white investment where you're putting your money into a Vanguard
Right.
stock tracker or something like that. Is there's a lot of color, and there's a lot of depth to these startups, and we really want to enable people to to feel connected to them, but and follow their story, and tell their friends about their story, and tell their friends what they're invested in.
Right. So you mentioned about a few VCs that are already in your platform. Say, so I'm a retail investor. I come. Do I get to choose which VC, or do I get to know about the deal, or how does it work?
Yeah, so you go on there and you can take a look at all of the different funds that we have, and you can have a look at all of the different fund pages on joinfurther.com, and you can pick and choose between which fund you want. You can see their past investments, you can meet their management team, you can see their investment thesis, you can see their track record and how their funds have performed over the past 5+ years. And you can see any fees, you can see absolutely everything all on there, and then you can choose the fund that you feel is right for you.
Got it. And how does the what's the business model like? If I'm an investor, I pay, suppose, £5,000. I invested. How do I? What's the cut? What's the admin fee and stuff like that?
So we don't charge any fees. We we you get in exactly with exactly the same deal as a high net worth investor would get. So if you're investing £2,000, you get the same deal as someone investing £200,000, and that's really important for us. Like, we're only democratizing if we're properly we're probably giving you the exact same deal and the exact same access as the high net worth investor. Funds will charge an upfront fee, and they'll charge an annual fee and a performance fee, and those are all clear and accessible. And that's also that on the other side of that, potentially fully or partially offsetting that, you can get tax relief on a large number of our investments. So
I see.
investors who invest in funds on Further can get up to 50% of their investment back as income tax relief. So that's definitely one to look at.
Is it primarily for the UK audience, UK citizens, or all over the globe? First of all, who is the target audience in terms of geography?
So the target audience is initially the UK audience,
Is the
mainly
UK
because
audience?
the tax relief is only beneficial to UK investors. But in the future, we will be adding some LP funds onto the platform. We're the
Got it.
more yeah more broadly known VC funds which do not carry any tax relief, and so it will be open very much to everybody. Like it is open to anyone right now, but just because the tax reliefs are so compelling for UK income taxpayers,
Hmm.
then yeah, it's definitely the target market for us right now. But when we have broader standard LP funds on there, then that will be targeted worldwide.
Got it. And you mentioned you raised money for this, or like how did you plan this entire effort? Since I mean, my audience who are listeners are also product leaders themselves. Like you saw this opportunity. How did you plan your MVP? How did you plan did you build your own team, or you outsourced the development effort? How did all that pan out?
Yeah, so it was a lot of preparation because it was a completely different world for me, and so there were all sorts of different learnings that I had to take on, and yeah, so I that 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 kind of back work was quite a was quite extensive. So in my other company, we built our proprietary booking system, and that had all been kind of planned and built and managed by me. And so I don't think I knew it at the time, but I was essentially a product manager of that. And so I carried that through and carried the outsourced agency that we use for that through to Further. And so everything was built and designed in the UK by me and the designer, and then we outsourced that to the company that we use over in Mumbai for the product build for my other company. And so yeah, I'd say, like, when you're building something like this, it's so feasible to do so much now without having a technical background yourself. Like, as
Mm.
long as you understand essentially what your user wants, and
Right.
you can architect around that, then you can find a great agency or individuals to build that product for you.
How long did it take to build the MVP?
Took about a year,
Hmm. And
so
did you
it was
build
quite
did you build
complex.
closely with the client? Like, did you build closely interfacing with a VC already, or a few customers? How did you
So
who were you
that was
getting
one really
value?
beneficial thing for us. So one of our investors is a fund called Antler, and so
Ah,
Um, Antler were very helpful as we were going with helping us understand the inner workings of a VC, and and essentially what the fund would want from our fund side tools. So our business got two sides, as I mentioned: the B2C side, the B2B side,
right.
and they all kind of work together because the administration aspect of the B2C side is essentially what is essentially one part of, of the B2B tools. And so, yeah, speaking with Antler and understanding what they as a VC wanted from it was really important.
Got it. And when did you precisely launch? Because I saw some press releases, some media mentions already. So was it? Did it all happen after you launched it publicly?
Yeah, it was about a month ago that we launched. Yeah,
Got
so
it.
we
And
had a really good piece out in Sifted, and that really
shifted. Yes.
kicked everything into gear.
I was checking out there. I just realized there is a new player as well. So lots of players in this space now. Bunch, you must have heard about them, right?
Bunch, yeah, I think they're more on the kind of SPV side, aren't they? They like, I think they just raised 7 odd mil yesterday.
7.3. Yes. So I
Yeah,
think
wow.
it
Yeah,
just
they're more
happened.
like, so there's kind of there's two different types of players. Well, probably loads of different types of players, but like they're very much like Odin, Valban, where they're working on the SPVs of enabling investors to get into deals. So, for example, you mentioned you're involved in an angel syndicate, and
Right.
they'd be working with those kind of guys to collect all those deals together, collect all those
Right.
checks together
Right.
to manage all of those. We what we do is a bit different to that because um, we're focused quite heavily on the B2C side, which those guys don't touch, and
Mm,
we also like we because we build our tools around the customers. Then the B2B tools that we have are very much like about the investor reporting, lifetime investor support, and things like that. So whereas like the um, the SPV guys are they definitely seem solid. Um, it's they're dealing with one specific area of it, and we're dealing with a completely different area of it. So we're kind of like in the same space, but it's not really
so
a
so
competitor.
so do you have no competitors at all in this space?
Probably the closest ones would be the share because there's a few different things. So crowdfunders and share trading platforms, we probably sit between those on the competitive spectrum, and they're probably the closest on the B2C side because we're um, more risky than share trading. Investing in venture capital is risky,
Right.
and but we are less risky by nature of diversification management, due diligence than crowdfunding. And so we those are probably the closest on the B2C side.
Got it. And what stage is your platform at? Like in terms of, so do you foresee building more product features? Are you adding more number of customers onto your platform? What
Yeah,
stage?
so we are yeah, that's why it took a year to build because we're there with the product on the B2C side. We've just released our guides, and that's the last major aspect of that because we know what the investors that potentially would invest in further would want, and they'd want to be able to trust a platform. They'd want to have something that was slick, high quality, and polished. And so then we didn't really have the luxury of being able to build an MVP. We had to build something that was solid right from the
So
start. And so that's what we've done. It has to look, feel, and work exactly like the fintechs that they're used to working with. And so yeah, so any future development is fully focused on the B2B side.
got it. And how do you see yourself? What's the vision like to make it global or a European pan player? How do you see yourself in maybe three to 5 years from now?
Yeah, I think that 3 to 5 years from now, we would be the home of venture capital for the vast majority of investors, and we'd probably be looking. We want to stay within VC rather than going into other asset classes, and so we would probably be looking overseas with that. But yeah, like it's early days. We'll see what comes up because I've definitely wanted in the past also to focus fully on the niche of investors that we're looking at because I feel that they're very underserved. So we're going for mid net worth investors, people that have got money to invest, but are maybe not the hundreds of thousands a year to qualify for having a financial advisor. and there's so much that can be done for this audience. So yeah, um, we time will tell, I guess.
So especially for startups that are changing the game of an industry, which you are, there needs to be a lot of education, especially when it is B2C, right?
Yeah, fully.
Is that something that you're paying focus to, like educating, creating content, and just elevating the knowledge of your target audience? Is that something that you're focused on?
Yeah, you've hit the nail on the head there. It's so important, education, and so that's the challenge for us at the moment, to deliver that education um, to our investors, and so yeah, we just launched our Learn About VC section of the website, and we'll be bolstering that and adding to that as we go, whilst also trying to get that content and get that education out to people in as many ways as possible. And so yeah, that's the big challenge for our marketing team right now.
Building communities, maybe.
What do you mean by that?
Community led growth, which is like having some forums where you do free webinars and they all sign up for that, and as a result, I'll tell you, I mean, most of the communities that I've joined, they have a big LinkedIn group or a big Facebook group, where you share in a lot of insights in terms of investing in investment basics. I mean, you are primarily UK player, but I have seen other players which are more European. They do these meetups, city-based meetups. Okay, so they all feel part of the community.
Yeah,
Uh, they Yeah, and then there's more loyalty, and then it's a virtuous
yeah,
loop by it.
it's definitely that's definitely a route for us. So I thought yeah, I thought you were mentioning something else there, but yeah, it's definitely a consideration for us. Um, our new head of marketing that's just come on board is super keen on that side of things. So we'll see what comes out of his head.
And how is the team now, if I may ask?
There's six of us now, so
Nice.
yeah, still nice and small. We're all completely remote, so everyone's all over the place. My co-founder
Ah,
Seb's currently in Colombia, and yeah, we've got some in London, some in Scotland, and so yeah, it's great. Um, we're yeah, fully
and you
remote team, and I think we'll stay like that.
and you said you work from a WeWork office as well, setup, right?
Yeah, yeah. So I'm in London, in the office every day, unlike the vast majority of the world right now.
Cool. Well, this brings us to the end of a very, very insightful conversation with Rob. Insightful because this is something that I was not familiar with. I did not know you could get into a VC fund as a retail investor. So this is definitely a first for me. So I got to learn a lot, and I'm hoping that this is in the making towards something big in a couple of years. Especially, I bet big on anybody who's changing the game of an industry. I think you are there, and hopefully in a few years you will be among the top. So and then we'll see a few startups who might want to replicate your success, but by then you would have already gotten the first mover advantage. So all the best to you, Rob, for sharing your insights to us.
Yeah, thanks, Ravi. Thanks for having me on. It's been great.
See you around, Rob.
See you, man.